Why is it so easy for freelancers and the self-employed to get into tax trouble? Can it be easy to get out? Freelancers and the self-employed typically experience higher job satisfaction. However, the downside is those who work for themselves have an extraordinary high level of non-compliance with the IRS, and they get the full brunt of the IRS's attention. Hi, I'm Anthony Parent of IRS Medic. In this video, I want to explain just why freelancers get into tax problems, but I'll also share with you the tricks many have used to get out and stay out of IRS trouble. Problem number one. Freelancers need steady cash, but don't get steady cash. When you work for yourself, if you lose a customer or go out of business, you often don't find an unemployment check. No. Rather, the government extracts from you regardless of what your debt or risk position is. Cash flow for many small business owners can be the most important metric. Light cash flow is real scary, yet a level of success can happen, but can be hard to recognize. So many freelancers become very leery or unsure about sending off huge estimated tax payments to the IRS. When you see an operating account looking healthy, the last thing you want to do is empty it by sending it off to an agency that you probably don't feel all that good about. Many self-employed individuals simply can't make the estimated payments they need to because it is just too scary. The key to success is to be disciplined and to make estimated tax payments without thinking about them. A trick can be making estimated payments every month or even weekly. That way the checks are smaller and more regular, so your emotions are easier to manage. Problem number two, no one to withhold for you. This problem is closely tied with our first problem. In 1943, the federal government forced employers to withhold taxes for employees. The reason this was done is that the U.S. income tax began to apply to nearly every taxpayer during World War II. The expanded application of the code would completely fail without this. Most people, if left to their own devices, would not be in compliance with the IRS without the promise of a refund check once they file. But the self-employed have no one to file their withholdings for them. They are responsible for themselves. There is no one to force discipline, a discipline that can be so critical. So one trick is to find someone, a friend, a spouse, a tax professional, to give you a nudge about your estimated tax payments. Problem three, stupidly high self-employment taxes. If you could set aside 16% of your income for retirement, you'd have a pretty good retirement, wouldn't you? For instance, in Australia, employers and the self-employed are required to put at least 9.5% of their gross pay into a retirement fund. This was the Australian version of privatization of their Social Security. The result? Australia is beginning to have a lot of middle-class individuals become millionaires. But here in the US, we weren't so lucky. Attempts to allow people to be responsible for their own retirement were shut down. So we are stuck with the same broken retirement system that forces freelancers to pay about 16% of their net income to the IRS for Medicare and Social Security taxes, all for the privilege of working for oneself. This massive tax bite is typically ignored for planning, but oftentimes the self-employment taxes are far more than federal income taxes. The key is to understand exactly how much in self-employment taxes you need to pay, and sometimes to see if a change of entity, to say an S corporation, makes sense in order to reduce self-employment taxes. These three problems lead to an IRS penalty treadmill that doesn't really ever seem to end. So let's suppose you get behind for a year. If you were to file, you see that you were assessed penalties. So you go and try to throw some money at the balance, and by the time you nearly have that balance paid off, another year has gone by, another year with another tax due, and more penalties added to the pile. This can lead to a bitter irony. Some of the people who have the hardest time paying taxes wind up paying the most to the IRS. Now, if you do owe, maybe you decide not to file. And not just for this year, but for all years you've owed. And now maybe you have 5, 10, 20, even 30 years of unfiled returns. So how can we fix this? No matter whether we're dealing with just one tax bill for 1 year or decades of tax problems, our solution tends to start the same. We get our clients, no matter what, to start making those estimated tax payments. And once we make the right estimated tax payments, then our clients are no longer adding to the problem. If the client isn't adding to the problem, then we can get a real plan in place. A plan that's as realistic and based on what our client can pay, and also takes into account current tax compliance and all the necessary expenses to run a business. Whether your solution is an offer and compromise, a partial or full pay installment agreement, we enjoy getting our clients the breathing room they need so they can focus on their business, wondering what the IRS is going to do next. Like and share this video if you found it helpful. Subscribe to our channel to stay on top of the most recent updates to tax reform. This is Anthony Parent of Parent & Parent LLP, IRS Medic. I thank you for watching.